Hi, this is Rob Warlow from Business Loan Services and welcome to our weekly Friday Business Finance Bulletin. And if this is your returning visit, welcome. If it's your first time, glad you're with us. Now, the purpose of these videos are just to give a brief overview of what's going on in the world of finance and give an idea of what we're up to. So let's crack on. Well, a very interesting survey came out this week from a firm of accountants called Kingston Smith. And what they wanted to do was to have a look at the relationship between banks and business owners. As you can imagine, that relationship has been a bit strained over the last few years. But what the report was looking at, it came out with really 4 key findings. So I want to go through those. Now, the first finding was that business owners need to get rid of the negative mindset when it comes to dealing with banks. Now, I can hear the screams down the camera when I'm saying that. But what the report is essentially saying that, do you know what? Business owners today are assuming that banks are going to say no. That's the basis on which they start. But that is not the case. Banks are not automatically saying no. Now, they are for some businesses, but banks are out there doing deals for good businesses that put a good proposal together. I'm seeing it. So that's the first message. Don't assume that you're automatically going to get a no. The second point that came out was really more for banks. They were saying that business owners need a better understanding of the loan process, what they need to do. So they were saying that banks' websites are either just very bland and not much information, or you have to go so many levels deep in order to find out the information that you require. So the action point for banks, more information out there to help business owners understand what the loan process is. The next point was they were saying that business owners also need to have a better understanding of what the assessment criteria is for the banks. What are they looking for? Now, that was one of the main reasons that I wrote my book Loan Sharp, which you've got a picture of it here, to help business owners like you understand what it is that banks are looking for. So you need to understand that banks are looking for a business plan, up-to-date financial information, a good credit record. They want security. Get inside the banker's mind to understand what they want. And the fourth finding was really again for banks, is that if a no is given, the banks are not very good at showing the business owner what the alternatives are. What are the alternative sources of finance? So they want banks and business owners to be talking more about what those alternatives are. So there was a great summary, a great report. I did a blog on it. Check on the website and you'll see. Another bit of news that came out this week, similar to this, was findings from a survey that the Royal Bank of Scotland did, but it's an internal survey that they asked an independent body to carry out on RBS and NatWest's lending process. Now, the report was carried out by a former Deputy Governor of the Bank of England and said it was very critical of RBS about the culture and being too risk-averse, processes not clear, etc. So RBS has come out and given a number of commitments of what it's going to do to help business owners get that all too elusive yes. So if you bank with RBS or NatWest, hopefully you'll see some changes over the next couple of months. Now, I normally record this video on a Friday, ready for it to go out on a Friday afternoon, but today is Thursday, and the reason I'm recording a bit early is I mentioned last week that this weekend I'm off to Amsterdam. So Friday, by the time you view this, I'll be in Amsterdam, because Saturday morning I'm running a seminar for a guy called Kevin Green, who's running a 3-day wealth building course in Amsterdam, and I'm going there on Saturday morning to deliver a session for the business owners in attendance about raising finance. Now, you may wonder, what does a guy from the UK have to tell people in Holland about raising finance? Well, the thing is, the principles are exactly the same. It's no different in whatever country you are. It's putting a good, strong case together, and what I've said just a moment ago about understanding what the banks want. So next Friday, I'll be sharing hopefully some footage and take this camera, film around a bit, and give you some news about how that went. So that should be good fun. I'm looking forward to that. Another quick survey that came out this week as well, it's really interesting, by Bibby Financial Services, said that 23% of business owners trust and go to for advice from friends and family. Nearly a quarter of business owners would prefer to go to friends and family for business and finance advice. Great. Your friend down the pub, etc., may have a different slant on your business or your problem, but hey, my advice certainly would be to seek out the advice from the professionals on the accountancy and the financial side. And certainly if you've got queries on raising finance, of course, get in touch with us. Happy to have a chat through whatever your concerns are. Now, my tip for this week is around VAT. Now, VAT, one of the very many calls I get is from businesses who have got into problems in paying VAT. I had a call this week from a business who had the HMRC literally knocking on the door. They could not pay the VAT. The bank couldn't help them, and the bank won't, because banks don't lend money for that sort of thing to get you out of trouble with the VAT. It's just not possible. So my tip for you this week is, if you're a VAT registered business, is to make sure that you open a second bank account and take the VAT element of the invoice when you receive it, take that 20% and put it into that second bank account out of the way. So you accumulate your VAT up, so when it comes to the end of the quarter, the VAT money is there. And in fact, you'll end up with a bit of a saving, because obviously you will have VAT to offset against the purchases that you've made. But just get into that habit. It just saves that big cash crunch at the end of month 3. And when I talk to many business owners and I suggest this idea, taking 20% of the turnover away, they just say, oh, we can't do that, Well, if you can't do it, it means that there's something wrong within the business. Your pricing is wrong, your sales are not at the right level, whatever it may be. Because you have to remember that that 20% is not yours. You are an unpaid tax collector for the government. So get into the habit of putting aside 20% of your turnover into a second account, so it's there, ready to go. Hassle, no calls from the VAT hassling for that payment. So there we are, just a quick overview and some tips about what's going on. Have a great weekend and a great week, and I look forward to telling you what happens on my Amsterdam trip over the weekend and sharing some more news and tips with you. Great weekend, speak to you next Friday.